Hello, everyone, and welcome to another edition of Room to Grow, the QX Global Group podcast. Today, I'm delighted to be joined by the legendary Keith White, and I'm going to ask Keith to say a little bit about what he's been up to more recently, and to tell us a little bit about his backstory with CRM and various other adventures he's had in PBSA over the last 20 or 30 years. Keith, over to you.
I'll keep it short and sharp, David. As you know, I could speak forever. I'm probably one of the old boys in the market. I was a director at Savills, running their sort of student operation, and they sort of gave me the very great opportunity to do a management buyout of there roughly 20 odd years ago. And to be blunt, they didn't know what they were selling and they didn't know what it was worth. So I was very happy at that point. Spent 25 or nearly 25 years growing that into a very large platform. It was always my intention to sell. I don't believe in intergenerational businesses, and it's always nice to take a profit and go and enjoy life. So since then, I've been traveling. That was 5 years, nearly 6 years ago, and I am constantly being asked to help people and advise people and work with people. So I'm working with a number of people, and I have done over the last few years, some big international pension funds, American private equity, who are sort of latecomers to the PBSA market, but feel that they've got to make the step sometime. You constantly get the same refrain of, oh, we should have done that 5 years ago. It looked expensive now. It's cheap now, isn't it? So I'm sort of working on sort of several large projects at the moment, meetings next week on 2 big acquisitions, which will make a bit of a stir.
And that's pan-European, UK and
UK only at the moment. The intention with one of the platforms is to go pan-European, but we have convinced them that let's just get a little bit of a stable product base. Let's all let you guys learn on what this is. I've done work in Europe before, and it's a hard road to travel. A lot of people have found that.
We'll perhaps cover a bit more of that off.
Give a story of why you should be very careful in Italy.
Indeed. Okay. All right. Well, let's kick this off then. Hopefully, we've got time for 5 or 6 questions over the next 30 minutes or so. I mean, the start of a 10, really. Given your background in third-party management, how do you think the PBSA third-party management industry, has evolved in the UK since you set up CRM all those 25 years ago? And what are the challenges and opportunities that are in front of it?
I mean, the product that they deliver now is unrecognizable from when I first started. I mean, literally, I didn't have a website. I put an A-frame out in the street and I let the building and I took cash. It was we were in one of the very first PBSAs built. The product is different in the sense of the buildings, the rooms, and all the social space and social media. But it's also your engagement with your customer is completely different to what it was when I first started. You basically move them in, move them out, and you fix something if it broke. Other than that, you hardly ever spoke to them. There was no communal space, no communal engagement, none of that. So the world is very different. And I think the third-party management, or PBSA generally, is a very tough gig these days because of social media, because of people's slightly more, and this is an old man speaking, slightly more fragile mental state and mental situation because of the pressures that everybody lives under today that they didn't have when I first started. So I think it's a very tough one. It's interesting to see that the third-party PBSA market is almost shrinking in a sense. There aren't really many major players in there. I can only think of 1, 2 real major players and 2 or 3 others who are dabbling around the edges, because increasingly the institutional investors want to build a vertically integrated platform and want to build, like IQ, as you know, and others have done exactly that product. So the third party market is a little bit difficult. And also it's a trading market now, whereas before it used to be. So product trades so rapidly and moves around so quickly that it's a hard road to travel.
That's interesting. So you think the sort of maturing of the PBSA as an asset class and the improved liquidity is actually playing against really the third-party managers being able to sort of do what they do, because it's
exactly because there is a big aggregation play in all of this market because bigger is better. because it reduces your op cost per bed and it gives you bigger branding and bigger reach into the university world and into the international market for students. So it is hard. Regularly people build a nice building, they get it stabilized, then they sell it into an institutional investor who will hold it for 5 to 7 to 9 years at a closed-end fund. Then it recirculates again, and we make a lot of agents, a lot of very rich for selling the same thing third and fourth and fifth time.
Yeah. Yeah. Um, as you mentioned at the top of the call, you're involved in advising buyers in the UK and in Europe. And what's your view on the market in the UK currently, the PBSA market?
Um, I think it's a bit tough at the moment. I mean, there's a lot of talk, and I'm hearing lots of apocryphal stories about occupancy. Generally, the market is saying, on average, late 80s to early 90%, but within that, there will be some damaged buildings which have got some real problems, and some cities with massive oversupply, which, if you take a view that by 2030 we're at peak 18-year-olds, there is a question mark in my mind about when does that dynamic change. But equally as well, the government are doing their very best to destroy the off-street market housing. So, maybe one will balance out the other. The problem you've got is construction costs being what they are, and therefore driving rents is beginning to cause, I think, a significant problem. So I think you have to be very careful about what you buy. My view would be, do not go to the top end of the triangle, because that market is very shallow and very fickle. I've seen it, a little story in Nottingham. Nottingham fell out of the top 100, particularly the Chinese market, very much melted away because they love their top 100. Nottingham University came back in. All of a sudden, a lot of Chinese, particularly this year, have been trying at the last minute to find accommodation because it's the top 100 again. So these things move around.
I think I heard similar about Sheffield. I mean, it's really damaging. Yeah.
It is very damaging. Yes.
And so what about the European context? Similar or completely different? And I know it's very hard to talk about Europe as some sort of homogenous entity because, of course, different jurisdictions have completely different trading and market environments and university environments. But are there any thoughts on how the European PBSA market's going? Any particular countries that are interesting from your perspective?
People are generally looking in the Southern European space, which is the classic Spain, Portugal, Italy. France is harder to do for a whole range of reasons. It's interesting watching how that market's evolved, because the market, i.e. the student and the parent, are now recognizing what PBSA does, because we have to remember that Europe has a very deep direct let apartment style rental market.
Yeah.
There's a big push in a lot of the university towns, which are also cities. There are also, a lot of those cities are all big tourist cities as well. But there's a big pushback against short-term lets, Airbnb. Barcelona, for instance, are looking to close every Airbnb down in 2 years' time. Florence have put an embargo anymore and are looking to close that down. So that, again, creates a different dynamic in the marketplace. Mum and dad are very much more involved in the purchase in Europe than they are in the UK. They will go to site.
Yeah.
In Spain, mum and dad will go, then grandma and granddad will go, because they're all making a contribution to pay for it.
Right.
So it's a very different letting strategy. But from the ones I know of, they are all letting very strongly because they've got a good product at a good price. Land prices are much more compelling and different in Europe than they are in the UK. So you can build and produce a rent at a much more compelling level. So it's becoming known now as a product and a place to live.
Yeah, we might come back to that at some point about Airbnbs and changes to supply and demand if that stock comes back into the market at the end of the podcast if we've got time. But I'd like to move on. Interesting news in the last few months. Obviously, they had an extension, but with the Empiric business being folded into Unite, it does mean that we end up in the UK with only one listed PBSA player. Why haven't there been more IPOs of PBSAs in the UK, and does it really matter?
I don't think it matters. I don't think there is they're not big enough I don't think, to take you to an IPO. But I just don't think the institutional investors are there to put their money into it. I mean, I've spoke to numbers of them over the year. I mean, if you look, all the big pension funds and other institutional investors are reducing dramatically their investment in UK equities at the moment and taking their money elsewhere. So I think there's quite a negativeness from the big institutional funds. They may do something on their own within their own fund structure, like M&G and people like that, PGIM, but they won't, I don't think, back an IPO style, which is strange because it changes the whole dynamic of what those properties are worth, because it's sold on a PE basis, which is completely
Right.
different.
Yeah. Yeah.
I don't think it makes any difference. I don't think, I'm not a lover of brands, never have been, in the sense of, as a student or parent, I buy it once or twice in the whole of my life and that's it. So the brand is irrelevant in that sense. There's a macro level of explaining exactly what you are and what you believe in. But in the end, it's price, location, and product. Always has been, always will be, in my opinion.
Yeah, I certainly. There is a view, isn't there, out there that actually students don't attach themselves to IQ or Roost or Unite. They attach themselves to a building in a city, and that's what they identify with. Jones Smith Hall or whatever it might be, rather than a particular. And I think sometimes the sector, um, overplays the importance of brand. I think I have some empathy with that.
If you ask a student where do they live, they will never say Unite or Student Roost. They'll say, or whatever the name of the building is. They will never say the brand.
Rarely. Yes. Okay. You touched on it earlier on in one of your other answers, and you and I have spoken about this before, but there is an imperative, I think, for the sector to produce lower cost rooms, and there are ways that you can improve density through, larger clusters, twins, non-ensuites, etc. And development of these types of schemes has been vanishingly rare, absent any sort of long-term university underwrite. So disregarding your sort of DBFOs like United have just done with Newcastle, for example, why do you think it is that the Retlet boys are not building lower cost accommodation, given the huge pressure on student finances and the obvious opportunity in that space?
The customer doesn't want it. They're hard to let. Non-ensuite, very, very difficult. It's not a product that the customer wants. If you think about your sort of normal, difficult to define, but if you think about a middle class student, or they live in a 2 or 3 or 4 bedroom house, they'll have mum and dad will have an ensuite and there'll be a family bathroom. If they're a 1 or 2 child household, they've effectively got their own ensuite. It's what they're used to. And sharing that kind of intimate space, and it is an intimate space, is a problem, I think.
I would agree.
Everybody's scared to step into that space because they don't know what it will do. But they know ensuite cluster. The large clusters are interesting. I'm not sure how well they work either, but it does improve the density, obviously, because you're building less corridor space and less non-revenue generating kitchen space. But the product just doesn't have the demand from the customer.
Yeah. I wonder if the sector has sort of failed to maybe, present this, because what you ask students is, what things do you value? And they'll say an ensuite room, smaller clusters, etc. But the question should be phrased, perhaps should be turned around to say, if we can get the rent at £150 a week or whatever that number is in a particular city, what would you be willing to forgo? Because what Happy are reporting is that over 75% of students are working, I can't remember the exact figures, but in excess of 15 hours a week.
Yeah, I saw that.
Yeah. So clearly students are poorly funded. I mean, that's self-evident. Maintenance loans haven't kept pace with inflation, and certainly not with rents. So there has to be a pressure point. And I agree. My own experience in IQ was that the best rooms and actually the cheapest rooms sold first. There was a squeeze middle. but non-ensuite product was very, very difficult to shift. And yet I struggled to square that particular paradigm with the parlous state of student finances.
It is odd, isn't it? But and I've never been able to reconcile that myself, because logically you would go, right, I want to commit to this university degree. I want to commit to coming out with the best possible qualification I can get to launch myself into the modern world. So do I want to stay? So how do I get there? But there just isn't the demand. I always remember chatting to the guy who used to run Kent University's stock, and they were forever being lambasted by the students' union about, cheaper prices, and they did a deal with what was Liberty Living at the time, and none of the students wanted it because it was too far away from the university.
Mm.
So the only way they could get people to take those rooms is by guaranteeing them in second year they would get into the halls by the university.
Yeah, yeah.
Um,
Although I think from memory, wasn't that an accommodation in Chatham and the
was a long way away,
or something
yeah.
like where? You're talking a mile or two. I think we're talking a city or two.
Well, has always stuck with me that it's about, as I say, product, place, and location,
Yeah,
or the price and
yeah,
location, and you have to, fundamentally always reference back to that.
yeah. And the London Plan PBSA policy, may be adopted in other university cities. What do you think the impact of that be? I mean, or similar, what do you think the impacts of that are likely to be?
Potentially disastrous. It works in London because you can cover the costs of your 35% sort of affordable by charging £400-500 a week. You can't do that in many other parts of the country. So, and construction costs don't particularly change that much wherever you are in the UK. So how do you square that circle with that large slice of affordable, whatever that might be defined as, and the ability to actually then do your development at these increasing costs? So London is an exception to that rule, in my opinion. And I think outside of that, it could kill off almost all future construction in that market, which is great for those who are already in the space, because your occupancy goes up and you have an ability to tweak the rents possibly a little bit harder than you would have been able to. And particularly with a lot of the HMO stock leaving in a lot of the cities increasingly.
And do you think, on that last point, do you think the renters reform bill, if it ever passes into statute, will drive further exit of the mums and pops
And
landlords from the
undoubtedly.
does it therefore follow that PBSA is in a healthier position as a result of that, or is that a bit of a reach?
No, I don't think it is. The biggest competitor to PBSA is BTR these days. But some of those investors don't want students in them. Some of them don't care. But BTR is the largest competitor to PBSA as far as I'm concerned. I think the whole issues around the Renters' Rights Act, plus also Reform Act, getting confused between the two names, but also all the increasing standards for the environmental standards for heating and the condition of the property. All of these are going to put more and more pressure onto the mom and pop end of the market, which is still the vast majority of that off-street housing product. So I can certainly see a lot of that. Well, a lot of it has left, and I think more and more of it will leave. So if you get a pincer of increasingly difficult to develop and build, reduced supply of alternatives, it becomes a little bit difficult. It may balance out quite nicely, as I mentioned earlier, in that if we get to the 2030s and the 18-year-olds, that peaks out and starts going over the other side of the curve, it may be a natural balance to the demand supply within the marketplace.
Yeah.
Because unless there's a big jump in participation rates, that will slow down the number of students applying. Unless there's a change in government with internationals, which may or may not happen.
Well, I mean, I think, that last point is interesting, isn't it? Given some of the utterances of Labour MPs who should know better, talking about Mickey Mouse degrees and and the like, and the possible implementation of a tax on international students.
Yeah.
We've already
It
seen.
really annoys me, this Mickey Mouse degree sort of line that they come up with. Um, it's so insulting to the university world and all of those people who have put themselves out to get their degree. I've always taken a view, and I've spoken to lots of friends over the years. My view is the degree is probably 20% of the value of what you learn. You become a more rounded individual. You become able to look after yourself, make decisions for yourself, learn to mix with people from different backgrounds, different countries, different societies, different approaches. And what's the difference that and then going into a work environment where you meet people from everywhere on the planet potentially? So it makes you a more rounded human being and makes you a more adjustable person to deal with the challenging environment that is coming our way, even more challenging. So I find it insulting in the extreme. And if you want to be blunt, they've got their PPE from Oxbridge. I have no idea what it's really like to be a student. Haven't got a clue.
Yeah, I think. Well, I'll keep my own counsel on that, but I hear you. So, given the sort of headwinds, political from left and right, and the diminishing number of 30-year-olds, 18-year-olds from 2030, and participation, which has been growing nicely for decades, flattening out participation rates. The geopolitical situation, the strength of the pound, all the other headwinds that are coming in, notwithstanding there's some positives such as HMO, the constriction of HMO, etc. Do you think we're in for some sort of market correction in PBSA?
At a macro level, I don't believe so, no. I think it's, again, if you look at the picture of your life, there are 5 or 6 things that you do in your life which determine the rest of your life, which is your university, your marriage, your career. That sets the tone for most of the things that happen in your life, and everything is a consequence for that. Let's assuming you do get married. Let's say life partner, we want to be more PC, which I'm not very good at. I still think that market will be there, and I think the demand will be there. I think the university world will shrink a little bit. With the merger that's recently been announced, I think that is the beginning of a number of things like that that's going to happen. And I think the number of universities will shrink down to probably nearer 100 from the 140 something that we currently have. And they will offer different products and different ways of doing things. But there are lots of places where you could say, Sunderland and not Newcastle, the other one in Newcastle, or Coventry and Warwick, or things like
Northumbria, yeah.
Northumbria, yeah. There's loads of them out there where they are geographically close to each other, and you can certainly see it. I mean, if you go back to the early part of my career, I was a senior exec at Nationwide Building Society, and I was head of asset management there. And one of the things I constantly got involved in was the Building Societies Commission ringing me up saying, "We have a small building site in trouble. You will merge with them. Not would you like to? You will merge with them." And you can see the Office for Students having a similar conversation at some stage potentially, which is you will be merging.
Yeah, I mean, I think the Greenwich and Kent story is not a surprise to people who know about the situation that Kent's been in financially for a number of years.
Exactly.
But I think we will see other M&A activity. As I've said a couple of times on this podcast before, I think it's harder to see, and you use the example of Newcastle, and actually Northumbria is a very well-financed institution as far as I know. But if you take the example of large conurbations like Newcastle, London, West Mids or whatever, it's more possible to see M&A activity than some of these outlying places like Cumbria or wherever, where there's one institution and the next one is 100 miles away. And it'll be interesting to see what government's appetite is to step in to those institutions were they to struggle as Dundee has done in Scotland.
Yeah. It's going to be very interesting. I absolutely don't believe that any university will be allowed to go under at all. no government will ever allow that to happen, because it creates knock-on effects beyond anything you can imagine, and it affects their funding and confidence in the sector, which is absolutely critical for the future of this country, because education was key to everything.
Let's hope that's never tested. Keith, we're bang out of time. I want to thank you for taking an hour out of your afternoon to talk to the Room to Go podcast. We'll get you back at a future date, I hope. But for now, thanks everybody for listening.
I'll be able to tell you what I've been up to, hopefully.
Cheers.
Thank you.
Bye.
Bye-bye.